What's up, guys? Mr. Fit to Flourish, and today I wanted to talk about stocks and coffee. So, what's going on this week in the markets? What has been happening in the markets, and what should you be doing in the future with these plays? All right, so let's get right into it. Stocks and coffee with First Team Investing. So, we always like to start off with a quote. And our quote today is: "Your standards determine your results." So if you change your standards, you change your life. So this means the people you're around, the places you go, the trades that you take, the food that you eat, the diet, exercise. What are you settling with? What do you actually deserve? Okay. So we have the best team in the world. We have a ton of resources in the Discord, all that good stuff. Okay. We trade live every morning. So if you want to join, link in the bio below. All right, we also have our trading boot camp 315 and the 16th, so March 15th and the 16th next week, Saturday and Sunday for 4-hour classes, a lot of presentation materials, courses, all that good stuff. All right, we can review. So this week we had a ton of good play calls, a lot of puts this week as the markets were absolutely falling from the sky. All right. And then in terms of earnings, so Target had a healthy beat on EPS and revenue, but they lowered their guidance and the stock fell. MRVL fell from like being $95 all the way down to like $78. So the equity tanked 18% on poor Q1 guidance and forecast. Okay, but they did have a pretty slight beat on EPS and revenue. Now Crowd had a slight beat on EPS and revenue, but it dipped 7%. The stock did because the July outage is still weighing on its revenues. Okay. So remember last year when we had that cloud outage that affected airplanes. I was in Aruba and we were stuck. It was affecting my pharmacy, billing. It was affecting everything. Okay. Now Avgo Broadcom. So Broadcom jumped on an upbeat forecast, raising the hopes of an AI rally resurgence. So it rose 27 points after hours, but it fell pre-market the next day and closed the gap. And that's kind of something I really wanted to look at real quick. So if we go to Avgo, right? Let's go to Avgo real quickie over here. So Avgo was falling out of the sky and it hit this 178.68 key level. And then after hours, it was all the way up here near 202.15. But then the next day in the morning, it was only at 187, which is still pretty good. It's like a 9-point gain, but it closed the gap immediately. And what we saw after hours, we saw Avgo rip, but none of the market went up with it. So you would expect a sympathy play with Nvidia, SMCI, and some of these other chip sectors or chip stocks in the chip sector or in the AI sector to rally after hours as well, but no one else rallies. So we know that from that, we knew there was a lot of weakness in the market and that we would likely not get a good move to the upside the following day on Friday. At least that was my thought process when it came to it. All right. So let's keep it going. So economic data. So ADP. So private employers added only 77,000 jobs compared to the expected 148,000 jobs. 33,000 jobs were lost in transportation and utility. And then jobless claims came in a little bit better than expected, and non-farm payrolls did not come as good as expected. And unemployment also came in a little bit. The unemployment rate came a little bit higher than expected. But then we had Papa Powell come in and speak a little dovish on Friday, giving the markets some optimism, as he did say that they were aiming for some rate cuts. However, they're still extremely uncertain, and we'll talk about that in a little bit. So the QQQ hit correction territory, and a correction is a drop of more than 10% in equity. So that was a 10% drop. We saw that in the Qs. We didn't see it in SPY yet. So how do we know? A lot of the time, one of the indicators for a recession is on the chart. You might see a death cross. And what is a death cross? So a death cross is pretty much when that orange line is my 50 moving average, crosses below that blue line, which is a 200 moving average. A 50 crossing the 200 is what's called a death cross, and it's a pretty good sign of extreme weakness in equity. Okay. And right now we're sitting on the 200 moving average on SPY and on QQQ. So let's see if we can hold those moving averages. A lot of people are saying, oh, this is the bottom. Well, we thought the bottom was the 200 moving average for Nvidia. We thought it was the 200 moving average for a lot of these Mag 7 stocks, and we continue to sell off. So I don't know about that being the bottom yet. People keep trying to time the bottom. You're getting cooked. And right now, is cash a bad position? It's not bad to be in a cash position right now, especially since these stocks are falling out of the sky. Just wait for the pullback, and then you might want to enter enter long or dollar cost average or do whatever you want to do. But you can get these stocks at a discount now, since if you are in a cash position instead of losing a ton of money on your entire portfolio. But again, this is a long-term game, so you don't have to be in cash. But is cash a bad position? Not right now. No. All right, so BTC sell off. So BTC sold off. Bitcoin sold off quite a bit after, in my opinion, massive manipulation, and then it had a pretty good move back to the upside. But right now, I think it's going to be falling again. So Bitcoin had this massive move to the downside. We hit this 79,000 key level, pushed back up into range. So what happened was we lost this important level here at 95,000. We lost it. We came back up to retest it, and we had a rejection. And this rejection is sending us lower. So I think the market has room to go lower because Bitcoin is a really good indicator of what's to come. And the volume RSI here is extremely low, which means that there's a lot of downward volume on Nvidia still, or on Bitcoin still, sorry. So Tesla received a lot of price target cuts and was adjusted down by Goldman Sachs this week. So what's happening with Tesla? It's still slacking, still lacking in sales. Tesla China sales plummeted 50% in February, and it's down 76% in Germany. And then to come is the S&P 500 reshuffling. So what's going to be added to the S&P 500? Well, DoorDash, WSM, EXE, and TKO. Leaving are some of these companies that their market caps fell below $6 billion. So that'd be BWA, TFX, CE, and FMC. All right. So we're going to talk about Powell in a little bit, but on Friday, he did say he's awaiting greater clarity on Trump policies before making the next move on rates. And then Trump's administration created a strategic Bitcoin reserve this week. And Coinbase is going to be hiring 1,000 people. So this is supposed to be pretty good. If they're hiring 1,000 people, that means that business is up. Business is booming, as they say. Now, one thing I did want to mention, this is probably the most important thing that I want to mention in this section, is that APP might be in trouble. Okay, APP might be in trouble. And Fuzzy Panda has accused AppLovin of using fraudulent tactics to bolster its online ad business. The short seller firm Fuzzy Panda Research sent a letter to the S&P 500 Index committee this week, urging the group to keep the stock out of the index. AppLovin's shares soared more than 700% last year, which is absolutely insane. And currently, AppLovin has a huge gap. I'll show this screen here. So AppLovin has this huge gap that it had after earnings in November. So this huge gap to the upside, and currently it's losing this key level here. Losing this key level, we have a 920 crossover on the daily time frame, and it looks like it has a lot more room to the downside. And it has to fill that gap, that'll take it down to 174.80. Okay, 174.80. So I want to see if this hits. And it looks like it might. So keep that in mind. Short reports cause a lot of problems. We saw what happened to SMCI in one day. We saw what happened to a lot of these stocks. Okay. Speaking of SMCI is back in compliance. We saw last week as they filed their 10K. And then WBA, so Walgreens Boots Alliance, was bought out by a private equity company, a private entity. So let's see how that takes place. Let's see what happens there. And then Nvidia got some pretty rare price target cuts, but it's starting to be more and more. They're starting to come in hot after earnings on Nvidia. Nvidia did post really good earnings last week. A really good earnings beat, but you know what happens? Investors, we're in the age of hype investing. So if Nvidia is not creating a UFO or flying to a different galaxy or something, or creating AI that solves all the world's problems, everyone is just kind of disappointed, even though Nvidia is a very good company. So look for that on Nvidia. Nvidia is showing a lot of weakness, and like I said, after earnings, it was going to sell off. And what is it doing? It is selling off. All right. So Trump continues tweeting tariff tactics, causing massive market swings. So tariffs and trade wars are still going on, okay? And I said, hey, Bitcoin is selling off and ripping. But you gotta watch the correlation with the markets. As Bitcoin sells off, the market's selling off. As Bitcoin rips, markets rip. Bitcoin is pretty much a good leading indicator right now for where big money is putting their money or how the markets are going to move. So pay attention to that. And then the year-to-date performance, I got this off of Options Millionaires on Twitter. So year-to-date performance of a lot of these assets. So a lot of these are down. Gold is up pretty big this year, but a lot of these indices, these assets, they're down. Okay. So one thing said by Mark Minervini. Mark Minervini is the U.S. trading champion, three-time U.S. Trading champion. So one of the best traders of all time. So he says the major indices are oversold and could certainly rally any day. So I put this because this is literally my thoughts exactly. And I learned from Mark Minervini. I read his books and I read some of these other Wall Street books, and he's spot on. So some of the largest updates can occur during corrections and bear markets. So we can see pretty big updates soon. But the market is still fragile and the risk is really high. Volatility is likely to remain elevated. Okay. The Russell 2000 has been the hardest hit of the major indices, down 17% off the highs. I have not yet covered my SPY short. So he initiated SPY shorts in February, and SPY was still ripping. So I was like a little concerned with that position, but he was spot on. And he said, I'm not interested in getting aggressive in the market or participating too much until I see evidence that the correction is over and individual stocks are working from breakout levels. As a result, we are in a wait for proof mode. So this is exactly what I've been preaching. I say this on my TikTok. I say this all the time to the people in the group, in the Discord. I say, listen, we're waiting for proof that the market's going up. Do not freaking get calls. Do not go long term on like swings. Don't go long. Don't do any of that stuff right now until the market shows you that it's going to be going up. The trend is your friend. Take those big moves to the downside. We see these relief rallies up that are short-lived, and then people panic sell again. So just ride the elevator down. People take the stairs up, we take the elevator down, okay? But this is the time to start looking for the next leaders, the stocks that hold up the best, that recover the fastest, and rally the strongest. So really good words from Mark Minervini, and I agree with him, and here's why. Markets don't like uncertainty. Economic indicators are pretty trash right now, these economic data points. Okay, since markets don't like uncertainty, most people only know how to sell, so they're just selling stock. Okay, they're selling it, causing price to go down. The real estate market's still in a bubble. Car market bubble burst. If you haven't seen car prices, holy moly! And then as long as significant amount of retail keeps trying to time the bottom, there's a significant amount of liquidity for big money. What does that mean? It's a paradoxical effect. Okay, this is a paradoxical effect that creates market liquidity. So whenever everyone's saying recession, oh, there's a recession. Oh, there's a recession. Well, that creates liquidity. That causes big money to start buying price up. And people are going to still keep thinking, oh, there's liquidity. They're going to give big money these good prices. And then once that rally starts to happen, then retail starts to join at these highs, which is when big money is actually selling. And then price goes down. And when price is going down, big money is actually selling. And people are trying to time the freaking bottom, okay? That's creating liquidity in the markets. Everyone's saying, oh, this is the bottom, this is the bottom. No, as long as you keep trying to predict the bottom is never going to come. As long as you keep trying to predict the top, that top is never going to come. It's going to keep going. That creates liquidity, okay? And that's what I mean by this is a paradoxical effect that you see all the time in and time out. People trying to time recessions, trying to time the bottom, trying to time these rallies. No. Okay, so the longer you try to anticipate a recession, the more that markets are going to climb. I'm telling you. And the more you try to time the bottom, the more that the market's gonna fall. Okay, so John Maynard Keynes actually had a really good quote, and it goes like this: markets can remain irrational longer than you can remain solvent. What does that mean? That means the markets can make absolutely no sense and just move for absolutely no reason longer than you can keep trying to test it with money. You can keep throwing money 1,000, 10,000, 20,000. Keep throwing money at the market, trying to time it, and you're going to keep losing it because the markets won't make sense. Okay, and it can stay like that for a longer time than you can have money, basically. Right? And then some of Powell's remarks, I wanted to kind of reiterate. So the White House is in the process of implementing significant policy changes in 4 distinct areas, and that's trade, immigration, fiscal policy, and regulation. So it is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. So this is coming from Powell, okay? So noting that uncertainty around the changes and their likely effects remains high. So if uncertainty remains high, markets don't like uncertainty. Stocks can still come down. So stop trying. I'm telling you guys right now, stop trying to time the bottom. Okay. Powell said the Fed is focused on separating the signal and the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity. So, Fed doesn't know what to do. Investors don't know what to do. People are going to continue to panic sell. All right. We might get these fake relief rallies up, but until we get some certain indicators, do not try to time that bottom. And then some of Trump's remarks I thought was extremely important as well. So a lot of these articles and remarks you can find on Yahoo Finance and MarketWatch. So Trump said, U.S. President Donald Trump has asked the public to bear with him as he seeks to overhaul trade policy, describing the economic pain that's expected to come with that as a little disturbance. Okay. So policy uncertainty in the wake of tariff announcements has contributed to a negative shift in sentiment across the markets, leading to sharp declines in equities, a weakening in the dollar, and outflows in treasury funds. Everybody's selling, everybody's panicking. Okay, so a little disturbance is a really good way for like a national leader to say, "Oh man, this is gonna be pretty bad," but I don't want to scare anybody. Hey, it's just gonna be a little disturbance. We're going to get over it. Major cap. Anyways, the main risk for 2025 is a sharp resurgence in U.S. inflation on the back of tariffs, tax cuts, and immigration restrictions that could lead the Fed to open the door to hiking interest rates again. So pay attention to that. All of this stuff, this can cause the Fed to start hiking interest rates. The markets would get absolutely cooked. This would definitely, when everyone's trying, recession. No, this would cause a recession. For real. And that's okay, because recessions are cyclical. They're part of market cycles. If you take any basic economics course, you'll know that it's needed. Okay, but the market is definitely not priced for that. Okay, it's not priced for that. So, the fact that it's not priced for that and people are already panicking, that's pretty funny. All right, it's pretty funny. But yeah, and then so more stuff on Tesla. So I've been leaving this Tesla news in here because China EV sales have been falling. It's been falling, but Tesla's still up pretty big from last year. It was up around 140 or down around $140. It's currently up around 260. So it's still up pretty big and has a lot more room to the downside if it does decide to still come down. 210 is going to be the absolute low for now. And then Tesla is supposed to be allowing their FSD technology in Switzerland this year in March, so this month. And then NVIDIA is going to be unveiling their AI platform March 17th to the 20th. So good stuff there. And look ahead at earnings this week. Make this a little bit bigger. So look ahead at earnings. Boom, boom. So we have major earnings from Ulta, DocuSign, Adobe, Oracle, Dollar General, and BioNTech. So you could look at this chart here. So Oracle is going to be after hours on Monday, BioNTech pre-market, and let's see anything else here. Adobe after hours on Wednesday, DocuSign after hours on Thursday with Ulta, and then Dollar General pre-market on Thursday. All right, and then when it comes to economic data this week, so Monday we don't have anything. NFIB optimism 6 a.m. on Tuesday, but really job openings on at 10 a.m. on Tuesday can have a huge effect on the market. And then Wednesday we have CPI, core CPI, going to be a volatile day. Thursday, core CPI or core PPI, another volatile day. And then Friday we have consumer sentiment. Okay, consumer sentiment, another volatile day. Well, no, not really, but it's going to be 0 DTE Friday. All right. So, and then in terms of the watch list, this week my watch list is pretty much going to be APP. I want to kind of see if we can get that move to the downside. IWM, Nvidia, Tesla, and Microsoft. So that does it for today. So hopefully that helps you guys in terms of the outlook for this week. Keep in mind, you don't really want to try to time that bottom. You know that the market's going to be going up once we get market structure shifts depicted by 920 crossovers to the upside on these charts. So until then, just kind of trade day by day, take it slowly, and wait for evidence that the market is moving back up. It's your boy, Mr. Fit to Flourish, and I'm out. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.